Let's move into the Ted Butler article I wanted to talk about here. And Ted Butler's been around for a long time. I think I'm going to subscribe to his service here on as soon as I'm done here, because he's been around for a long time, and he's been the guy that's been talking about how these how these markets have been manipulated, who the short positions are. He's pointed it out in data, facts, not opinions. And again, this is a gentleman that I would call him the godfather of manipulation, not the creating the manipulation, but pointing it out to people. I think I learned this from, when I first read Ted Butler's articles, it was an aha moment for me. Here's the first guy, in my career in doing this, and I've been doing this since 1977. Start working for my father, and again, second generation dealer in precious metals, retail and physical sales. He explained a lot of what I saw going on over a period of time, and still does explain it. So I got to hand it to Ted. He does know what he's talking about. Out of all the people that talk about manipulation, this is the guy I think that knows the most about it. And why more and more people don't listen to him, I don't know. You don't even see him on corporate news, obviously, because they don't believe that narrative. Let's read what he talks about here. Again, this is December 30th, 2020. Hanging tough or hanging on, but there's a lot of relevance to something that he wrote a year ago. And again, if I want to read the new stuff, I'm going to have to subscribe. And I believe I will, because it's sure that, I'm always saying over and over why you need to have gata.org on your website or on your bookmark bar, because these are the guys that will tell you how the casino plays the game, who the manipulators are, how they manipulate it, when, and all this good stuff. And once you learn how to become a better player at the table, and you know how these guys rig the game, and you know the odds and all this stuff, you become a much better player and you start winning. So that's what Ted helped me to do, is understand how the game is rigged and how the game is manipulated. Let's read what Ted has to say here. He got a feedback from a couple subscribers this week, providing much food for thought. Their thoughts were similar and revolved around the plight of the 8 big shorts, including whether they could sustain continued big losses and continue avoiding publicly reporting them. This is kind of something interesting, that when I see people talking and commenting about JP and their short position, they really don't talk about the losses that some of these companies have incurred. And again, a lot of it's really easy to say, oh, JP, it's they're the manipulators, but there's other people out there doing it, big institutions as well, that Ted points out. The 8 big shorts. If you've noticed, I stopped. Let me see if I can blow this up a little bit too. If you notice, I stopped reporting on the open and unrealized portions of the losses and the realized and closed out losses for 2 reasons. One reason is that U.S. tax regulation deem all open and unrealized losses and gains for derivatives and futures and open contracts be marked to market as of the end of December, or design alternative fiscal year end. At that point, there is no distinction between unrealized and realized losses or gains. In addition, as much time has rolled out by since the big shorts losses started to accrue in the summer of 2019, the continuous rollover of the future contracts would automatically convert unrealized gains and losses into a realized variety. This leads to the follow-up question of why haven't the big losses been publicly reported? My answer, and this Ted Butler's answer, is largely similar to the answer I've given for how J.P. Morgan has been able to avoid reporting its and its affiliates' massive physical holdings of gold and silver. Namely, that banks' balance sheets reportings are mostly what banks want to report. Since the big shorts are mostly banks, just don't hold your breath waiting for the public reporting and recognizing of such losses. And more or less what Ted says is they don't have to show you that. They don't have to show you the losses. They don't have to be opaque about it. They can hide these losses. They can hide these gold and silver positions they have as well. And Ted clearly points that out, how they do it, and obviously why. And let's go on to what he says here. In fact, I've noticed a concerted effort on the part of banks to leak stories to the press about what a great year the bullion banks are having in gold and silver dealings. Talk about duplicity. The simple fact is that government data clearly document the concentrated short positions in COMEX gold and silver futures, and all that's needed at that point is simple arithmetic of multiplying the numbers of contracts held by the price change. Not exactly rocket science. We do know derivatives are a zero-sum game, given what the long side makes or loses is the mirror image on the short side with no exceptions. All the planet stories in the press won't change that equation, okay? It's not difficult to grasp why the big bank gold and silver shorts would seek to hide and distort knowledge of their predicament, as an honest and open admission of their plight would serve as only an open invitation for the world's investors to join in on a few big whales of vulnerability. And that's kind of what happened. Again, remember, this was written in 2020. You get your Wall Street silver people trying to put the squeeze on it. However, there's got to be bigger numbers than that. More people got to go in and demand silver on their contracts. And well, anyway, I digress. Let me finish up what Ted talks about here. The choice between deceiving to buy time or giving up and facing certain immediate additional massive losses is not difficult to comprehend. You also have to remember when Ted Butler wrote this, silver had made its move. This is 2020, December 2020 when he wrote this. This is before silver actually started making even a bigger move up to its 30s and stuff. So that was really putting a hurting on the banks and these institutions, these big 8 institutions that have been short. So they even incurred more pain after Ted wrote this article. Let me move on here, though. The big shorts simply have no practical alternative than to pretend that nothing is amiss. The problem is those pesky facts of government position reporting and the movement of price. Again, this is why I love reading Ted Butler's stuff. He backs his stuff up with data and proof and evidence. He's not one of these, tinfoil hat wearers, or though people like to they'd like to make you think he was, and people that believe the stuff was. But again, we've been vindicated. These, JP got fined almost $1 billion for spoofing and doing exactly what Ted's been talking about for years. So the vindication is here for guys like Ted, smart guys like Ted, who actually pointed out many years ago how these guys short these markets, the naked contracts, and how crooked the silver market can be. Let's move along as well here. The important point is intentional misreporting won't change the underlying reality of the losses. As to whether the losses threaten the solvency of the shorts involved, I don't think so, based on my measure of what the losses amount to and the public financial profiles of the banks in general. Even with the average loss to the 8 big gold and silver shorts around $1.75 billion each, the overall financial circumstances for institutions wouldn't seem life-threatening. But what the heck do I or anyone know for sure? And then Ted's pointing out that he didn't think their short positions were going to break in these banks, but they are huge losses that they haven't reported yet. Ted says, I do know that losses are not distributed evenly and that the largest short most likely holds losses at least double and likely more than that of the smallest of the 8 big shorts. In fact, these are the questions I spend the most time contemplating. I'm glad Ted does this type of contemplating because, again, this is pointing out, who the players are, how they do it, and, why we're going to win in this game. We know the situation that they're in, and this is 2020. Again, remember, this article is almost 2 years old. Ted says, I do know that the losses accruing to the 8 big COMEX gold and silver shorts are the largest in history and sudden and quite dramatic turn for the very reliable results achieved by these traders for decades. Please remember the big shorts never lost when loading up on the short side against the managed money traders for decades. Doing something consistently profitable for close to 40 years, and what's Ted's pointing out here is these short positions have done this for 40 years. They've made this specific trade. They've made billions of dollars, millions and billions, whatever you want to call it. And Ted points out doing something consistently profitable for close to 40 years has to influence one into continuing the behavior. It also most plausibly explains getting hooked into a position as threatening as a position the big shorts now find themselves in. And again, remember, folks, we drove the price of silver got driven up because of physical demand, mostly, I would suspect, a demand out there up to almost $30 there for a little bit last year. And I think it was 2020 or was it 2021? Only to get knocked down suspiciously by guess who? COMEX or somebody. I mean, again, middle of the night trades, all this bullshit. But Ted points out that they're in big trouble, and now that the market's backed off, maybe they are not in quite the losses they once were, because if they carried those short positions through, silver is a little cheaper right now, but no less. Let's continue here. Therefore, it's no real surprise that the big shorts have hung tough to this point, aside from the brief burst of short covering that sent gold and silver prices to new highs in early August. The latest COT report indicates that the 8 big shorts in gold and silver held their largest concentrated short position since March. So this data is old and outdated right here, but let's go on. So there has been no overall short covering to this point. The big exception, of course, is the behavior of JP Morgan, which for all practical purposes, a lot of people don't realize this. I still hear about JPM's short position, but they're out of it. And Ted points this out here. The big exception, of course, is the behavior of JP Morgan, which for all practical purposes has eliminated completely its formerly dominant short position. Okay? So when you see a lot of guys making comments out there in the comment sections, oh, JPM short position, oh, JPM, no, they're not in the short position. They don't have that dominant short position anymore. In fact, they're probably in the opposite position, but let's read on here. With there being no question that the 8 big shorts are still massively short, the question becomes, are they hanging tough or hanging on? While that's the question that will only be definitively answered in the fullness of time, since it holds the key to future prices, in my opinion. It is one question worth pondering, okay? And these short positions, again, are they hanging tough or hanging on? I think they're kind of, boy, hanging tough or hanging on? That's a tough question. Hanging on. And again, if prices have been down substantially since then, they're probably in a better position now than they were. Complicating the matter is whether JPM's retreat from the short side is permanent or whether the master of gold and silver criminal will re-enter the short side and attempt to bail out the big shorts. The answer to these questions are all a matter of time, and that's a very good point that he points out here. JP is probably in the opposite position, and they probably got this huge amount of gold and silver that they've leased out or that they've lent out to the shorts and stuff. So you know, they're on the winning side of the trade. You know, they already paid their fee to the government for cheating all those years. Nobody went to jail. Again, too big to fail, too big to jail. I digress. So, the good news is that the answers will be provided in future data and price reporting, with the bad news being we must await these verdicts. For my part, since this ever-present concentrated short position, particularly in silver, is the sole explanation for the continued suppressed price that so many are starting to recognize. The suppressed price, you know, people know the price is suppressed. The suppressed price, not necessarily concentrated short positions. I can't help but have an optimistic take. After all, silver is about the only, get this is a key phrase too, and again, this is an article a little bit older, but this is timeless. After all, silver is about the only investment asset still above 50% below its former price highs of 40 and 10 years ago. In a world where new dramatic price highs have been seen in everything connected to an investment world that largely accounts for the gushing forecast of $50 silver in the fairly immediate future. And I believe, Ted, you know, silver, it's priced like it was 30 years ago, man. I mean, it's just cheap. It's never hit its all-time, it's never gone beyond its all-time high of 2012 and 2080 either. So it's one of the it's probably the cheapest commodity out there and one of the most needed and used commodities out there. I've been venturing to say for some time I think that silver is a strategic metal. It has to be. Let's move into and finish up Ted's article. It's not too long. I got a little more to go here. A little more than I thought. So it's not a deliberate change of heart that is about to transform the former metal bad guy into good. It's something much more basic. Like it or not, the Big Short appears close to having exhausted the reign of terror and price suppression that has endured for more than 35 years due to mechanical market realities. The short as well as long derivative positions are very much open positions that need to be closed out in time. Until open positions are closed out, any resultant losses caused by price movements must be deposited on a daily basis with gains available for withdrawal. So even though the big 8 shorts have been able to avoid any public disclosure of their losses to date, they've had to deposit every penny of their massive losses with COMEX clearinghouses. There are no exceptions to this, as this is what guarantees the continued viability of the CME group. So no matter what is publicly reported, you can be sure that the big shorts have deposited funds sufficient to cover those open losses. So again, this has not been cheap for the big shorts to do this. As a result, the big shorts are clearly caught in the bind of not wanting to publicly disclose their massive open losses out of fear of alerting the investment world to their predicament and vulnerability. Well, I think the cat's out of the bag a little bit right now. And growing. And the financial reality of continuing to fund those losses are, as they accrue and grow, making the predicament worse. Either the big shorts must either mount a desperate goal line stand, with or without the aid of JPM, and turn prices down sharply, and induce the massive amount of outselling that would enable them to buy back a good number of the short contracts, or they will fail to do so. Again, remember, Ted wrote this in 2020. We weren't into the mid and high 20s and nearing the $30 mark at this time. We were still in the low 20s and maybe the high teens, I think. But let me continue. And Ted kind of nails that right there. Remember, they must do both, rig prices sharply lower and induce outside selling. One without the other is not enough. The big shorts did succeed in rigging prices lower temporarily into November 30th. That was, again, 2020, and reducing their losses by $10 billion, but not inducing sufficient outside selling. Somewhat close, but no cigar. And again, the short positions, what they want to do is they want to have people sell their physical. There's capitulation that they were looking for, and the capitulation just wasn't happening, and it's still not happening, even though they managed to monkey hammer these markets down lower and lower over the last year. That's going to change pretty fast, trust me, as Ted points out here. At such a time, it's hard for me not to think of my old departed friend and silver mentor, Izzy Friedman. I can almost hear him lecture me about the big shorts being able to get their full pants pulled down. Izzy's version of the big shorts being overrun to the upside never faded, despite them always being able to snatch victory from the jaws of defeat on more times than I care to recount. And it's a good point, because we're still seeing this. While I always allowed for the possibility of the big shorts being overrun, I never shared Izzy's fervor. Putting aside the most dangerous words in the financial time, this time sure looks different. And, we all got to be careful of this, folks, because, it's easy to say that. This time looks different. And that's, famous last words sometimes as well. And he does point that out. Will things change anytime soon? I don't know. For one thing, the big shorts have never been this deep in the financial hole, with their previous worst high watermarks prior to this year being in the summer of 2016 and the year in 2019, both times being close to $4 billion. Wow. Aside from the hole being much deeper this time, the absence of, and again, we're much higher than that 2016-2019 prices now. The absence of JPM Morgan on the short side in the position for the most massive double cross in history is something Izzy never got to realize, but make his premise all the more compelling. Should the big shorts begin to buy back shorts and send silver on a price journey of the ages, Izzy's version will live forever, or vision will live forever, at least to me. And again, at some point, it's got to end. It's got to hit the upside here, and that's exactly what he's pointing out here. Now, who gets left holding the bag? I guess Izzy was hoping that the short positions wouldn't, and they probably will. But with only one trading day left for 2020, I'll report on the eight big shorts final tally in Saturday review, and I'm planning on to see. Okay, we'll get into that. And what else does he talk about? Okay. At today's prices at publication times, and again, remember this is a couple years old, the 8 big shorts are out an additional nearly $600 million from Friday's close, putting their total loss at $13.9 billion. That's a cool $10 billion more loss than occurred than last year. And remember, this was lower prices. I think these shorts are still incurring these huge losses here. And I'm going to subscribe to Ted's newsletter to read a little bit more about this. This thing is pretty dated. But it does answer a lot of questions that people still talk about. And, does JPM still own that short position? No, they don't. And today's close also put JPM Morgan ahead by $26 billion on its physical gold and silver holdings, to say nothing about the billions of dollars it extracted in COMEX paper trading over the last 12 years. And if JPM did lease out several hundred million of ounces of and significant quantities of gold, while it wouldn't necessarily enhance their total profit, it sure would add to the borrowing short's losses. So in the worst case scenario, JPM doesn't own all this gold, but they've loaned it out, and it's going to cause losses on the short side. I would peg 100-day moving average as gold as being 1904 basis on the lead contract, and it's still. Well, anyway, Ted was a little bit ahead of his time here. I think at the time gold was 1894, silver was 2660, and that was on December 30th, 2020. Okay, so it was in the mid-20s right there. And we're down a little bit lower than we were. I'm curious how this played out for the short positions now, with silver sitting at the $22 range. Really good article. You can read this for free from Butler Research, LLC. He has it on his page, but remember, you can only read the older stuff. But there's still some great tidbits in the article that Butler Research writes. I think I'm going to check into subscribing at some point. I'll let you know if I do. Well, gata.org, one of my favorite websites as well, but no new articles updated here. If you're new to watch my videos, make sure you bookmark this and check on it once or twice a week. It'll make you smarter than the average bear. And if you want to know the basics of how markets are manipulated, click on one of these links here. These guys will tell you exactly how it's done. Not a lot to talk about on ZH as far as gold and silver and precious metals news, but while crypto will not be money in the U.S. analysis, this is a very interesting article here. It talks about what I've been talking about is, or VBL has been mentioned the same thing that I agree with, is that we're, they're pushing towards a digital cashless society. They want to eliminate cash. They want to eliminate the privacy that people have. I think cryptocurrencies was just a great experiment to get people used to a cashless society, especially the younger folks. But again, I digress. Good article here by VBL. While crypto will not be money in the U.S. analysis. Let me see what else we got here. Total claims collapsed to just 4.2 million, down 20 million. So they're going to spin the jobless claims being down, some total claims being down substantially. But here's what corporate media and maybe even the Wall Street will kind of spin this and try to make it a positive somehow. But really, the collapse of claims just means that once you've been through unemployment and you've been through the whole run, you can't go back. I mean, I guess you can reapply a couple times. I don't know what the limit is, but there's a certain amount of times they'll let you live on unemployment. A lot of people run through unemployment entirely. They're off it completely. And it doesn't mean they have a job. It just means that their unemployment claims ran out. There's still a big vacuum out there for jobs and all that such. So this is not necessarily a good thing for the economy because, again, these people have not went out and got jobs, or we don't know if they've gotten jobs yet. We'll see that. We'll see how many jobs were created recently. But no less, the stimmies have ended. Stimulus has ended. So this is not a good thing for the economy overall, because these are not people that have gone back to work. They're just people that are probably going out and looking for work, or about to default on their rent payment or their mortgage. What else we got going on here? Let's see here. Good article, Kobayashi Maru. And I read this. Again, if you're a reader of ZH, go in. It's by Michael Avery at Rabobank. Again, not going to go into it, otherwise we're going to be here for 2 or 3 hours. And what else can we see here? I'm going to look at the first page, and shortages are permanent. Nothing really interesting to talk about here, so let's kind of move on. I don't even feel like talking about politics. I'm so sick of politics, personally. Let's take it to Wall Street silver peeps and see what's going on. I'm going to do a quick refresh here and maybe see if I can point out some product and what kind of prices you should be paying for these types of products. It looks like there's always guys buying different types of products on Wall Street. Can't see that product. What is that? Got my first bar. I can't blame you. That's very, very pretty. If that's a 10-ounce bars, 10-ounce bars, really, you probably should be paying. Again, premiums are going to be changing here soon. What I say today may be different later on today or tomorrow, because we are noticing that there's shortage of some product. There seems to be a lot of Britannias out there. And what other products out there? Silver Krugerrand seem to be available. Generic products are tightening up once again. 90% prices on silver are just crazy. I used to love 90% and promote it because of the price. It was really cheap, but right now I wouldn't advise it. 90% US 90% constitutional silver is just ridiculous. The premiums are ridiculous. There's better deals out there. This is a better deal as long as you can pick it up for spot plus 375 or less. Is that a 1-ounce bar? No, it looks like a 10-ounce bar or a 5-ounce bar. And again, if you're not subscribed to Wall Street Silver and you watch my videos, I highly recommend it. It's pretty cool. I mean, a lot of enthusiasm out here, and they got I've never seen memes in gold and silver business, so it's kind of fun to see silver memes and gold memes, mostly silver memes. The old ways of manipulating the new okay, that's pretty cool. Picture of a 100-ounce majestic silver bar. I have silver bars out there. This guy probably should have paid spot plus $3 and no more. We have good brand 100-ounce bars here available in our store for starting at spot plus $3 an ounce. And I do have good availability on them. Most of them are Valcombis. And let's see what is this guy collecting here. 1 ounce star sign silver coins, which are cool. I would call these probably generics, and this falls into the generic line. And generics right now are getting tough to find. I think if you probably should be paying no more than spot plus $3.75, maybe $3.95 over for generic 1 ounce silver. So if this gentleman paid under $3.95 per ounce over spot, then he's probably okay. Same thing here. Britannia's right now, I have them available for spot plus, what is it? I think spot plus $3.75 or $3.95. Forgive me, I can't remember off the top of my head. Starting at spot plus $3.75. I don't have any 5 ounce bars. Nobody really makes them, but you can find them out there occasionally. You should be able to pick up most of this product for spot plus $4. You know, cuckoo bars and some of these dragons and things that get big premiums. Again, if you're paying over more than spot plus than $4 an ounce right now, I think it's a bit too much. Just my opinion. There's products you can buy out there for cheaper. What else we got here? Oh, somebody's making their own $1 billion note. Oh, that's a $1 billion coin. Okay. Pretty cool. And let me just see if there's any other products, and we're going to close it up. Here, great deal, metal ore. Boy, I haven't seen a metal ore bar in a little while. They don't make metal ore for us. Metal ore, actually, they're my refiner. I got a contract with them to do my refining, and they don't make gold bars anymore. They haven't made them in quite some time. They're kind of out of that market. So that's and again, great bar. That should be no more than spot plus like 75 or 80 bucks. I'm not sure what that is. That's a queen something. Silver 999. Again, if it's spot plus $4 or more, it's probably too much. Again, that's just my opinion. Unless you're just collecting it for fun. But if you're stacking silver and gold for just the sake of stacking it, try to keep your purchases under $85 per ounce on gold, and on silver under that $4 per ounce premium mark. Well, I think I'm going to move out of here because, again, we could be here all day. Let's just talk about yesterday's video. Fornicate thyself, FB and DC. And I did say that in the video, if you watched there. I was really upset a little bit because Facebook closed out my account after 10 or 12 years. All my friends and family and people I've known for years over something I don't even want to talk about. I'm disgusted. And what they accused me of doing was even more despicable. You know, hate and speech and violence. Come on, give me a break. I'm anything but that. But again, I'll get into that some other time. Maybe I'll do a political video just on FB. So FUFB. Sorry about that. Let's take a look at some comments out here. And Cara Hop, more facts, less opinion. I replied to that. When you got facts, that's when you start making opinions, Carl. So thanks for watching. That's just my opinion, of course. And I appreciate your opinion as well. Silver Surfer, hey, thanks, man. And nice to see all you guys. I appreciate all the kind words, and I appreciate all of you watching and following my videos as well. And you too, sir. And let me go up here and see if there's any questions I can answer. Wow, all great people here. Again, thanks a lot. Trip was good. Thanks for asking. And I didn't catch any fishes at all. I ended up having to go buy fish. But no less, I did relax. It was relaxing. If you saw my one gone fishing video, man, that one spot, I could have sat there for hours. It's like watching the fish videos on my screen, just very, very relaxing. Joey, thanks, man. Appreciate it. Stephen Wimpenny says silver's not using microchips. True. I'm not sure if it's using this. I'm not sure. Microchips are primarily just silicone, I think, or something else. But silver is used in the circuitry and solder, I believe, as it makes a great conductor of electricity. So, yeah, thanks for pointing that out, Stephen. You are absolutely correct on that. Connecting microchips is probably where silver is used, and gold's also used because it's a little more got corrosion protection than silver. I notice they use gold in the outside, where you plug your phone in. They use the gold contacts there. And again, that's because gold is probably much better at being resistant to corrosion than silver is. But I believe silver is a better conductor of electricity than gold. I've got to check into that. Thanks for watching, Stephen. I really appreciate that. And I always shied away from crypto because I understand it cannot understand it has value. Then I heard about a GSX gold, but I looked into it and what you had to do buy. The thing scares if you lose or forget your password, there's no recourse. Yeah, that I was thinking about that this morning when I thought about cryptos. I'm terrible with passwords. I can't even imagine if my account got hacked, I'd be upset. Obviously, as it would anyone. So that's always a possibility when you own cryptos is that your account will get hacked. Don't let anyone tell you it can't happen. It doesn't happen. It happens all the time. Or the idea of losing your password or your encryption or wherever the hell it is, that's pretty frightening too. So a lot of reasons I like having gold in my hands. If the internet goes down, power goes down, I got no issues. I still got my gold in my hands. If the entire economy goes down, I still got my gold in my hands. So there's a reasons that I like a physical hard commodity like gold. Thanks for watching again, Robert, Silver Surfer, and Zipper, and Peter, and Linda. I have a few rolls of silver coins. Would be a good trade you talked about last time. I would say if you can go to a local dealer and trade some of your 90% coins, you should be able to get anywhere from I think $3 to $4 over spot for it, maybe in that range on a trade, maybe 3 plus. I'm not sure. I didn't look at 90% buys today, and you could probably hold on. Let me think. I don't think for a few rolls of silver it would be worth your drive today, Linda. So I'd hold off on that. The spread is not that big, and the problem with the lower price stuff is you'd have to buy 100-ounce bars at spot +3 or less and have enough to make it worthwhile. So probably not today. I don't see that trade happening. Silver Eagles, though, I still think you can trade out Silver Eagles and come out with more silver on the generic end of it. Hey, Silver Loving Lou, thanks, I appreciate that. Fornicate thyself. You never heard that in years, huh? My father used to say that jokingly to people. Go fornicate thyself. Motto San says, what separate gold cryptos does cryptos require miners to maintain the network? Where do you think the money for those maintenance costs is coming from? Imagine if nobody sells their Bitcoin for 50 years. What is the cost? Yeah, cost of running the network. It's either paid by principal or network. That's kind of like ETFs, even the best allocated ones. They just eat you up in fees. You know what I mean? This is why there's no substitute for having a physical item made by stars, colliding neutron stars, very rare in your hands, as opposed to some digital numbers in the ether world. Anyway, my opinion. Thanks for watching, Motto-san, and commenting. I appreciate it. And the good thoughts here, Inspector and Michael. And I was on vacation. I'm back. I thought it was going to be gone till Thursday today, but obviously I got my dates wrong. It wasn't long enough though. Thanks for watching, D-Man. I appreciate it. Well, we've gotten through another show today. I always think these are going to be short, and then I just blab. So, hey, thanks for watching. This is Brian Kuzmar with Commercial Rare Coins and Precious Metals in beautiful Lauderdale by the Sea. Call us anytime between 10 and 4, Mondays through Fridays. Happy to help you out with any questions you have. Remember, we are a local brick and mortar. We advertise to beat APMEX, JM, SD bullion prices, and for the items that we have in stock and for the lower price items, we will not sell you overpriced bullion items. That's for sure. And again, we're the same location since 1977. I'm a second generation dealer, so feel free to come by anytime. Again, we don't do anything online, so if you don't live in my immediate area and you can't visit us, unfortunately, I can't sell to you. Maybe one day I'll open an online store if I can figure out how to do it. But meanwhile, we're just a local brick and mortar. Hey, thanks for watching again. Let's talk about what happens tomorrow when we see tomorrow. Talk to you later. Bye now.